Hi, Clint Coons here with Anderson Business Advisors, and in this session, I'm going to discuss the difference between a corp and a limited liability company when it comes to real estate investing. Because let's face it, there's a ton of information out there on the internet, and a lot of people get confused. They hear you should set up a C corporation, or they hear never set up a corporation, always set up a limited liability company. And then the question becomes, which one should I use? Well, we're going to go through it, and you might be surprised to find that you may choose one over the other based upon the information I'm sharing with you. So let's get into it. All right, so here's what we have. We have Corp on this side, and we have LLC on this side right here. Now let's just talk about it from a control standpoint. What is the difference between a Corp and a limited liability company? Well, in a corporation, you have directors and officers. All right, so you have basically two parties you're working with in a corporation that will run that business. So if it's just you, you're going to have to wear multiple hats. And many times this can be confusing for people. They're not sure if they need to wear their director's hat or their officer's hat when it comes to making an executive decision with respect to their business. In fact, I teach a class called Structure Implementation Workshop. We teach it in Vegas about every 6 weeks, and that's something we go into with our attendees because there's a lot of confusion as to when you're making a decision. Is that something that you need a resolution for in order to enact that particular business decision? So you have directors and officers. On the LLC side, you have managers. Now this could also be members who serve as a management role, but essentially it's just one position. So if you set up a limited liability company, you're not going to need to worry about which hat you're wearing. If you're listed as a manager of your LLC, then control is going to be centralized with you, and then all decisions that you make are made as a manager of that business. So when I'm looking at it from an ease of use in running the business, an LLC is definitely going to have it over the corporation when you're thinking about it from a control standpoint. So we like it from that idea. Now let's talk about the actual business itself, the operational. All right, as far as the document. So in a corporation, as far as how do you operate it, what governs the corporation, you're going to have bylaws and you're going to use resolutions to run your business inside of a corporation. So the bylaws, the governing documents of your business, they explain what each person can do. That is shareholders, officers, directors, what their roles are in the corporation, just how you issue out, how you hold meetings, how you issue shares inside of your business. So they're pretty detailed. With the limited liability company, you have an operating agreement, OPG, operating agreement with a limited liability company. Now, there is a real difference here when it comes to setting up a business, a corp or an LLC, when you're going to be working with other people. I just had a conversation yesterday with an individual who was considering setting up a corporation, but after I explained to him that because he has another partner that's coming in, the corporation is probably not the best way to go for him. He should go with a limited liability company, because in an LLC, when you draft an operating agreement, think of it like a contract. You can really get into the details, into the weeds when it comes to what are the expectations of each member of this limited liability company. For example, if I was going to go into business with someone, we're going to flip houses, and his job is to go out and find the property, and my job is to rehab the property. Well, I would want to put certain restrictions in there or certain requirements that he find maybe 2 deals a month that he brings to the LLC, or that he finds deals that have a certain amount of potential equity in them. Because I wouldn't want to be in business with someone where I'm doing all the rehab work and I'm also finding the deals and he's taking 50% of the profits. So with an LLC, it's real simple to spell all of this out. You can get really granular as far as what the expectations are for each partner. And if you don't meet those expectations, what's going to happen? You have a reduction in your ownership. Maybe you get a reduction in the payout. You can't do that same thing in a corporation with the general corporate docs. So it makes it much more difficult to structure a business around expectations when you're using a corporation. Especially, this is more important when you're bringing in outside parties. So an LLC is the better way to go, especially when we're talking about payouts as well, because most people who invest in an LLC, let's say they want to share in the profits of that venture, then you can spell all that out in your operating agreement, how the profit split is going to take place. Where in a corporation, you're not going to have that. It's either going to be paid out as a salary or it's going to be paid out as a dividend. So it's much more complicated to try to achieve the same result. So as far as operational, you're definitely going to go with the limited liability company over the corporation. So ownership. So here you have shares, and over here you're a member. So actually here you're a shareholder is actually what I meant to say. So what is the difference between the two when it comes to these particular businesses? Well, a shareholder is basically stock in a corporation. That's what you have. You're a shareholder, you have relatively no rights. I mean, there is a fiduciary duty that's owed to you. You can appoint directors in your corporation, but you're not as involved in the business potentially as a member in an LLC. When you're a member in an LLC, you have certain duties that are given to you in your operating agreement. Typically it has to do with, if we're going to sell more than 60% of the assets of the LLC, it's going to require member approval. If we're going to appoint a manager, it's going to require member approval. So you can give the members slightly more control over how the business is run to protect their interests, whereas in a corporation, shareholders just aren't going to have that level of control. So if you're considering investing into a company or you're bringing in other people who are going to be members, then you want them to feel comfortable with their investment. You can draft your LLC operating agreement to give them that level of comfort where you're not going to get that in a corporation. So I would go here. Asset protection. All right, so this comes back to here. Here you're a shareholder, here you're a member in an LLC. The difference between these two is that as shareholders, these shares are not protected from creditors. Okay, these are protected with what we call charging order protections. And so that means that if you get sued individually, we could take your shares from you. So you could lose the shares in your corporation, then you lose your business. Whereas a limited liability company, if it's set up in the right state that offers full charging order protections, a creditor cannot take your interest from you. They're protected from that creditor. So again, from a protection standpoint, I'm going to go with the limited liability company. They can't take my interest. That's great. I can still run my business and I'm not worried about losing it to a potential creditor. All right, taxation. So with a corporation, you can elect to be taxed either as a C or an S. Okay, a C is a standalone taxation. The entity's taxed at its own tax bracket. S is a flow-through. With an LLC, you get to choose C, S, partnership, or disregarded. So you can choose how you want to have the LLC set up for tax purposes. So obviously this is going to give you greater flexibility in the formation and choosing how you want to have that entity taxed for federal tax purposes over a corporation, because a corporation is limited to C or S treatment. So again, we got a benefit over here. Now you're probably looking at this and saying, well, Clint, I've heard in some of your other videos you tell people to create corporations. Why aren't you telling them to create limited liability companies taxed as a corporation because of all these benefits? Well, it comes down to this last point I want to share with you, which is called 1244 stock loss. All right. This benefit only applies to corporations. I work with a lot of people who have made an investment in their education to learn how to invest in real estate or to start up a business. Now, that investment can range anywhere between $20,000 to $50,000 or $60,000. Now, that investment is deductible to the business. So as you start bringing in money and revenue, you can begin to reimburse yourself and get that money back, and your corporation or your LLC is going to take a deduction for those expenses that it's reimbursing you for that education expense, that investment you've made. However, there is a distinct difference between these two, and that 1244 stock loss only applies to a corporation. It does not apply over here. And why that is so important is that if you decide at a later date that your business that you've decided to create is not for you and you've not reimbursed yourself the entire amount, let's say that you made a $60,000 investment and you flipped one property and you paid yourself back 20 of that. So you still have $40,000 that you haven't been able to collect yet. And so it hasn't been deducted. Well, with a C corporation, or a corporation in general, could be an S, if you decide to just wipe that out, that is dissolve your business, shut it down, we can pick up this $40,000 on your 1040 and you can take it as a current deduction against all other forms of income. That's huge. We recently worked with a client where we pulled back, or I think it was $80,000 for he and his wife that we picked up on their 1040 and got them back a sizable tax refund because they chose to shut down their corporation. They had $80,000 in built-in expenses inside of that business that they just hadn't been able to use up. You couldn't do that with a limited liability company. 1244 does not apply. So for that reason, I'm going to look for a corporation over an LLC. This comes up a lot. People always say, I went to my local provider, my attorney said, hey, you need an LLC, don't bother with a corporation for all of these benefits. But the key is they're missing this one right here. You know, I'd rather leave myself an opportunity like this when I'm setting up my business to ensure that I can capture that expense either through my business or on my 1040. If you go with the LLC, you've lost it and you can't do it. So ask yourself, do you want that open door at the end of the day if you decide to go a different way? My name is Clint Coons with Anderson Business Advisors.